Hello guys, I'll be doing a trade recap on GBPUSD. It was a sell trade taken on a 3-minute time frame. So first of all, we start on the monthly time frame. Using this monthly time frame, I just want to teach you guys a simple concept of price inefficiency and price efficiency. So presently, our main focus on this monthly time frame is on this one candle and this one candle. So on these two candles. So if we look at this candle from head to tail, we will notice the length of the candle wick is almost 3 times the length of the candle body. That is what I call price inefficiency. And whenever there's a price inefficiency created, there's a probability that in the future price might move to provide a correction in that price inefficiency. Looking at it, price came down and corrected this price inefficiency. This this week, the length of this week was completely filled. So looking at this other week, we see again the same thing. The length of this candle wick is far more greater than the length of the candle body. This is another pricing efficiency. So with that in mind, there's another possibility that price might sell off in the future to try to come and correct this inefficiency in price action. Also, I have to mention one, guys. In this concept, price is not obliged to complete the week 100%. It's not obliged to fill the week 100%. It must but based on the concept, as long as price is able to fill at least 50% of the week, the price inefficiency has been corrected. That is the concept. This concept we will use in later on in the video. Coming now into my trade, the trade we took today was a sell setup. So since it was a sell setup, this is my setup. My setup is very simple. If price is moving upwards and creating higher highs, higher lows, higher highs, higher lows, higher highs, I'm expecting that if price is coming down here, it should create a higher low to continue the buy. But once price reaches a demand zone, which is found on a higher time frame, any time frame can be a higher time frame, guys. Once price once price reaches a demand, once price reaches a supply zone within a higher time frame and gets a rejection, which causes a change of structure to the downside, this is already a sign to telling us that the market is bearish. There's a possibility for price to sell. So we try to see if there's liquidity anywhere in the market. We can see liquidity on both sides, or we can see liquidity on one of the opposite sides. The most important thing is, as long as there's a reason here below why we want to sell the trade, we don't simply sell the market because there's a change of structure to the downside, because it might be a false move. We sell we decide to sell only when we see there's enough reason below here for us to sell the market. The reason might be liquidity, for example. If we notice there's a lot of liquidity, we might wait for a retracement of price to come to another supply zone which was created due to this strong change of character. Then we get in our entry, and in getting our entry, our setup will be like this, which is our stop loss around here and targeting the earliest point of liquidity or even around here, provided there's liquidity. This is our simple sell setup, guys. So let's get in now into the chart. Going back to the chart, I'll start my analysis on the 4-hour time frame. Being on the 4-hour time frame, we are clearly able to see that price has been dumping. Price was dumping, created a structure here, dumped, created another low here, which created this high, which broke structure to the downside to create a lower low, which went up to create a lower high, which broke structure into a downside to create a lower low, which went up to create a lower high, which broke structure again to create a lower low, which went up to create a lower high, which broke down to create a lower low. And remember, guys, by now I've already taken I've already taken profit. I'm just trying to explain, guys. Remember the concept which I explained to you guys on a monthly time frame. When we see a candlestick formed like this, where the length of the candle wick is far more greater than the length of the candle wick of the candle body, then that is what we call inefficiency in price action. And price has to move in the future to be able to balance this price inefficiency. So here we look at this candlestick wick. So we look at this candle wick, we see clearly that the candle wick is 10 to 20 more times greater in length than the candle wick body. For this reason, that is our first confiance. That is the first thing telling us that price might go to the downside, because it might go to the downside because you want to feel this price inefficiency. And secondly, price might go to the downside because this demand zone was broken. See, it was broken. It means buyers are no longer in control, sellers are in control. So the selling pressure is higher. That's our second confluence. Our third reason why we are looking for a sell here is simply because the market has been creating lower highs, lower lows, lower highs, lower lows, telling us that it will continue to create structure to the downside. Based on these three reasons for us to take a sell, I had to scale down right to the 5 minute time frame, because that was where I saw a market structure. And I was even able to scale to the 3 minute and to the 1 minute. And if I go into the 1 minute, it's very clear. Sorry, wait, I have to have highlight my trade. Okay. So coming into the 1 minute, we saw clearly, okay, within the 1 minute, what do you guys see? Looking at this wick, candle wick and the candle body, the length of this candle wick on both sides is far more greater than the length of this candle wick. So what happened? There's a probability, as I told you guys, that price might go in the future to fill out this wick. It might fill it in 50% or 100% or 60%. It depends. But yeah, price decided to move upwards to fill the wick up. And once the candle wick was filled up, it gave us an inefficient price action, because at this moment, when this candle closed, there was inefficiency in price action. And this movement of candlestick from like this is because of of CPI. Today there was CPI, so that's why we saw a lot of volatility like this. And now, as price started coming down, as price started coming down, we're expecting to look for selling opportunities. Price reached here, got mitigated again, started moving up. So as price started moving up, we saw an opportunity on the 1 minute time frame to take a buy. Here was the opportunity we saw to take a buy. Sorry, to take a sell. It was an opportunity to take a sell, so that we might also fill out this candle wick the same way up here was filled. But the problem is CPI came out and there was a lot of volatility. So we're waiting for volatility to reduce or to die down. Then we'll see if we might export another opportunity. So once price came here, we never took a trade because of news. Because of news, we decided to wait. Here, you just have to wait. And upon waiting, what happened? This area was not respected. Price swept this zone. This price came up and swept all this supply zone. Sorry, let me explain clearly. Here is a supply zone C, created on the 1 minute time frame. Price came, swept this supply zone up here and took out all traders who took trades for based up of. So price came up here and took all traders who entered trade here based on this supply zone, and started retracing to the downside. And upon retracing to the downside, it retraced here, and since price retraced here, it went again up and it started coming down. Since there was another 1 minute demand zone here, price reacted from here. And because price had broken, because this supply zone had failed and this demand zone was respected, there was a probability that price will continue to go up. And therefore, what we're expecting is if price comes again within this other demand zone after the retracement, we might look for a buy. But what happened? Price went up. This candle swept all of this other candle that were here, it means liquidity here was swept on the left side. Price started dropping down and broke structure. This structure here was not respected, so price broke the structure down to the downside, telling us there's a probability for a sell. At this moment, we're just waiting for another retracement to be able to spot another supply zone for a sell. So if I scale from the 1 minute to the 3 minute time frame, you guys will see clearly this 3 minute supply zone. This is where we took our entry and we decided to take profit here. It's true, there's a probability that price might go below to fill out this week as it has done at the moment, but it might not do that today or tomorrow. So to be on the safe side, we prefer to take 50% of this area. Looking at this candle, if we calculate from here to here, we think taking our profit here is already 15% of this inefficient price action. So that was the reason for us taking profit. And that was another reason why I wanted to take a sell, because we saw this inefficient price action here on the 1 minute time frame. If you guys see clearly, there was inefficiency in price action on both areas. But inefficiency in price action up was corrected. Yeah, so was expecting the inefficiency in price action below also to be corrected. That was the reason why we took the trade. And because of this, our expectation, we went into the 1 minute time frame to see if we might see our setup on the 1 minute time frame. This very setup, which I explained here, is this very change of structure to the downside, and then giving us our entry is the same setup which we saw here, change of structure to the downside, giving us our entry. You guys, upon watching the videos, you guys can take a screenshot of this sell setup. This is the setup I use each time for my sell, and this is the setup I use each time for my buys, guys. So thanks for watching. Try to learn from my system. I will continue to provide you guys with trade recaps and trade analysis. Stay tuned. Continue to watch my videos, subscribe, like and share. Stay safe and stay blessed. Ciao.